Hello everyone and welcome back to my channel. In this video I'm going to explain to you the cash secure put trade management. Very crucial. If you want to be a profitable option trader, you must know how to deal with your trades that will be trading in the money. But in this video I'm not just going to explain to you the trade itself, but I'm going to show to you guys the maths behind the cash secure put trade management, and I'm going to provide the link of this Google Sheet so you guys can click below at the description of this video and can download this spreadsheet for you. So you can just place your data here and you can see how much you're making during the rolling, how much you made by the on the enter of the trade, how much fees you have paid. You can change your fees here. You can do a lot of stuff, but of course use it at your own risk. And the reason why I'm providing this for you guys for free and I built this was because when I placed this video here, I received a question from this content here to build an Excel spreadsheet showing you guys the maths behind the strike price and the stock price. So if you haven't watched this video here, go to our channel, click this video, watch this video below, and then you can come back to this one here. Then you can use this one here to manage or to apply or to trade, to put your trading logs into this Google Sheet, so you can pretty much keep a track on what's going on your rolling of your cash secure put. Okay, and by the way, for those of you that are watching this video right now and doesn't know how to trade options, guys, I got a full playlist here for you guys to watch. You can go from 0 to here in a matter of 9 videos. Of course, this is a beginner's course, and from here you can improve yourself, and of course you can go to better content, all right? But going back here to our PowerPoint here, guys, this was the question that I received from one of our subscribers, asking me to put something together in a spreadsheet to see how things works in terms of the where we start and where we ending with our strike price. And this is exactly what I'm doing right now. Okay, and of course I'm going to provide this for you guys. Okay, so basically just for us to remind ourselves, what is the cash secure put options? The cash secure put options, guys, very simple. Okay, very simple. Of course, I'm just going to show you in terms of enter the trade, but there's plenty of things you need to take in consideration, like delta, our DTEs, our strike price, our money needs, how much out of the money you want to place this trade, 10%, 20%, 40%, and so on. Also, another thing as well that I'm going to provide to you guys very soon, it is this thing here. Let me see if I can find here, because this is really good as well, and I want you guys to get hold to this, which it is this indicator here on trading view. As you guys can see here, I have all the numbers in terms of 7%, 4%, and so on, okay? And what you're going to be able to do is, let's say, for example, you want to buy here at 7.5%. This is the price that you're going to put your strike price. If you want to sell a cash secure put at 20%, this is the 20% you're going to put your strike price. You want to sell at 12.5%. This is 497. This is 12% below the current market price, okay? Very soon, I'm going also to make this indicator here so you can guys just put on your trading view and use to see where your strike price should go if you are willing to sell your cash secure put on this discount price, 7.5, 12, 20, 30, 40, and of course this is a variable which you can change as well. Okay, so keep an eye on our channel, because very soon, guys, I'm gonna make this available for you. But in a nutshell, cash secure put, very simple. We're gonna pick here, let's say 42 DTE, days to expiration. We're gonna open here our option chain, and let's say, for example, we are kind of like bullish in the stock, or maybe things gonna trade sideways, or maybe this thing here is trading at the all-time high. We're gonna go here, let's say 10%, okay? Right now it's trading at 217, which is the IWM, the ETF that tracks the performance of the Russell 2000, minus 20%, let's say roughly $200, okay? We're gonna go the way down here, we're gonna pick up our strike price, $200, and this will give our delta of 19. A delta of 19, that's not bad. This is pretty much of a stock is trading almost at the all-time high. At the all-time high, I go between 12 and 16. So you guys can have an idea how many things we have before we press the trigger. Because like I always say to you guys, the best trade management, okay, although I'm going to show you the Excel and I'm going to provide to you guys the Google Sheet so you can download and use it, the best trade management, it is done before we press the trigger. because once you press the trigger, that's too late. So all your trade management when it comes to naked put, cash secure put, covered strong, the wheel strategy, covered call, all of them is before you press the trigger. That's when you do all your trade management, okay? So basically we're gonna sell here, let's say the $200 strike price. Of course, one contract here, DTE 42, we're going to receive 2.47 multiplied there by our multiplier of 100. We're going to receive 247. This will be our maximum gain. And of course, if the stock goes to zero, this is our maximum loss. And this is the buying power required to open the trade. Very, very simple. In a nutshell, this is how you trade the naked put, cash secure put, and the short put for your wheel strategy and for your covered strong. That's how we start all this strategy, okay? But now, going back here to our spreadsheet, we're gonna pretty much simulate here a trade that we did on the ticker symbol EWZ. Okay, but of course you can use whatever ticker symbol you might like. Okay, you can play with these guys however you like. Okay, this is just for education purpose only. But basically, the way it works, okay, I'm pretty much following here what TastyWorks charge, but you can change here these fees, okay? Let's say we're gonna pay here $125 to open this trade. It's one leg, by the way, okay? This is only one leg trade. Why? Because we're selling here one short put options. That's it, okay? We're gonna pay $125, and every time that we roll the trade, we're gonna pay 26 cents. But you can change accordingly to how much your broker charges you. Okay, once you change here, for example, keep an eye, for example, let's see if I can show you guys here. Let me go back here to the right. Keep an eye on this column here, guys, okay? Accordingly that I change here, let's say your broker charge you $1.50, okay? As you guys can see, the entry here is gone to $1.50. Let's say your broker charge you, I don't know, 75 cents. Of course, to enter is going to be 75 cents automatically. Let's say your broker charge you to roll the trade 0.55. As you guys can see here, we pay 0.55 on all the trades. And of course, to close the trade, we don't pay nothing. Okay, so this is already formulated for you guys. You don't need to touch these colors here in a light blue. You just need to change this ones here in white. And of course, this one here, you don't need to touch them either. Okay, all formulated for you guys. Let's go back here, for example, to 1.25 and then 0.26. So very, very simple to understand. Okay, so basically, let's say, for example, on 4th of January 2023, we want to trade a cash secure put on a ticker symbol EWZ. They track the performance of the Brazilian ETF. It is a Brazilian ETF that tracks pretty much the main stocks in Brazil. Okay, and then we sold here one cash secure put option to expire on 4th of February 2023. And as you guys can see, this is a 31 DTE. Okay. And then the stock price at that time, or the ETF, was trading at $50. Of course, way above what's trading right now. Not that it was trading at 50. Remember, guys, this is just a simulation. You can change this price here however you like, okay? And then we did was we sold a cash secure put at 45 strike price. And by the way, I'm going to improve this Google Sheet here. And for those of you that download this Google Sheet here, I'll be sending to your email all the update version of this, because this, guys, is just a little bit from a massive trading log that I have. I have another entry here, the trade management, the close. I got a massive, because you need to quantify your trades to see what you're doing. And the only way you can do that is through data, okay? So stock price at 50, strike price $45, and then we receive a premium here of $2. Okay, very, very simple. And of course, this was a trade that we just entered. And then at the expiration date, which it is 1st of February, which it is the expiration date here when you place the trade, what happened was the stock dropped to 43.93. What we did, we sold, in other words, we just rolled this trade because we bought to close this one and we sell to open this one. That's what we did. We didn't change the strike price. In this case here, what we did is we just roll out. Okay, very, very simple. So actually, I'm going to put a column here. When is roll out? When is roll out and down? Let's say, for example, let's say 45, 45, 45. When we roll out and down to 44, you're going to see a column here say out and down. I improved that before I made this available to you guys, okay? So basically, after 31 days, the stock dropped to 43.93. What we did was we rolled this trade to the same strike price as you guys can see. And because the further expiration options always worth more than the option expiring today. Why? Because we have a great time value. We collect at 35 cents. Okay, so basically the 35 cents was the net premium from buying to close the 45 and selling to open the another 45. Okay, so the whole net here of buying to close and sell to open, another trade here which expire on 4th of March, which it is 28 days to expiration, we're still collecting 35 cents to roll this trade. That's why it's so easy to roll short puts. Why? Because the further expiration date always have more time value. Unless if we're going to roll down, we have to use that premium, of course, like we did here. I'm going to show it to you guys in a second. That's why we receive on 14 cents because we roll from 45 to 44, okay? And then, of course, at the expiration date again, remember, you can do this trade management, guys, 20 days before the expiration date, 10 days, when the volatility go higher, close to earnings, when you get a lot of premium, there's plenty of things you can do. I'm just keeping things simple here, okay? But remember, you must learn how to manage your trades. And there's plenty of things we can do to improve all this premium and improve our strike price. There's plenty, okay? But keep things simple. Let's get going. On 1st of March, okay, of course, here, the stock dropped to 42.17. Of course, was pretty much deep in the money, went from 50 to 42, and our strike price, it is 47. So basically what we did was, we rolled this trade here, but this time to 61 days. Because remember, sometimes, I don't think this will be the case because it's not that bad from 45 strike price to 42 current stock price. But if our strike price was 45 and the stock dropped to 25, even if it is a short put or a naked put option, sometimes you might struggle a little bit to roll for a credit. Okay, keep that in mind. It's not 100% always you're going to receive a credit. It cannot go very, 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 very deep in the money. Otherwise, you're going to have to increase this thing here to 180 or maybe sometimes even 1 year to be able to collect a premium and same time rolling your trades, okay? So now you got a 61 DTE. And then on 4th of May, it drops to actually recover a little bit from 42.17 to 42.39. We kept the same strike price and we collect again 18 cents. Okay, this is not bad. And as you guys can see here, this column here, this is so far the accumulate premium. We collect $2 to enter. And then we collect 35 cents, so total 235. We roll another 12 cents, 247. We roll for 18 cents, 265. This is all formulate for you guys. This is formula, okay? You don't need to touch this thing here. Okay, let me put a color here as well. You do not need to touch this column here as well, okay? Let me actually see if I can color there. All right, and this one here, it's actually... You just need to press rolling or enter, okay? You do not need to touch this. This is all calculated for you guys. So basically, every time you roll, it sums up, okay? As you guys can see, 362 is summation of everything. 325 is the summation of this. 279, summation of this. 265, summation of this, and so on, okay? Sorry to repeat too much, but it is what it is, okay? And then, on 4th of 7, if I'm not putting anything, the stock recovered from 42.39 to 44.25. This is the magic of rolling trades, because sometimes we get the opportunity, guys, on those bounce. And remember, nothing goes up on a straight line and nothing goes down on a straight line. And all those dead cut on those dead cat bounce, in other words, okay, like a bear market, we can do this trade management, which it is roll out in time, and same time drop our strike price, because it's exactly what we did here. Okay, on 4th of July, we roll our trades for another 30 days, as you guys can see here, 30 days, 4th of July to 20th of August. So basically 50 days. But the reason why we went 50 days, a little bit more than 30 days, because we rolled the strike price from 45 to 44, and we're still collecting 14 cents. Okay, this is not too bad. This is not too shabby. If you can decrease your risk here, which is lowering your strike price, and the same thing collecting premium, this is amazing. Amazing, 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 okay? And on 20th of August, of course, the stock price was trading at 44.11. It drops a little bit. We kept the same strike price. We rolled the trade for just 30 days. In this case here, we collect 45 cents. Why? Because the stock price, it is at 44, and our strike price, it is at 44. Okay? This is the magic, because we could easily, guys, easily close the trade even before here, because if you subtract your strike price minus the premium we have collect all the way here, accumulate, will be way less than the loss of the current stock price minus your strike price. That's why you need to keep an eye on, okay? Keep an eye on your collecting premium. How much premium you have accumulated so far? Because if the stock is trading at 44, our strike price is at 45, this is what? Minus $1, in other words, minus 100. But if you collect here, let's say $200 already in premium, you can close that trade way before. Okay, I kept rolling here to show you guys how it works. Okay, that's to show you how it works. But of course, you could have closed the trade here, and then we roll again. Why? To collect more premium this time. I want to show you guys two examples. One, keep it rolling, and another one, just close the trade. Because you can keep rolling, guys, forever, even if the trade is out of the money, because you can collect more premium. So basically, you're just opening a new trade, nothing else. Like in this case here, when the stock price was 44.25, we dropped to 44. When it went 44.11 here, we could easily close at this stage. But I want to show you guys two stages. One, we keep going, another one, we close down here. Because here, keep it going is basically just a new trade, nothing else, okay? But anyway, we collect 45 cents, and then after 30 days, 31 days, what happened was the stock on 20th of September was trading a little bit below 44 at 43.87. But remember, here, guys, our loss is current stock price 43.87 minus our strike price, which it is 44. So 43.87 minus 44, that's 13 cents, okay? Which is $13. But look how much, okay, look how much we have collected so far. Okay, look how much, 362. We are way, way, way above. So now that the stock pretty much closed on 20th of October at 43.87, actually went down a little bit to 44.37. So in this case here, we are losing what? 63 cents. Okay, 63 plus 37, that's 100 plus 44, 45. So you guys can see, I actually not lose anything because strike price 44. So it's basically 37 cents, 35 cents above our strike price. Now you can close for good, or you can just open your trade. In this case here, we just close. Okay, we just close this trade here at this level. There's no premium here, as you guys can see. We just close. Okay, simple. Trade is done. But what I want to show you guys is here at this level, we could easily have closed as well. Okay, you can call that whatever you like, closing, open new trades. I just kept here the same cycle so you guys can have an idea what I'm talking about, because you need to make sure when you're trading cash secure puts or naked puts, especially when you are pretty much enter your coverage triangle or your wheel strategy, which starts with the cash secure put, you need to know how much you're having. Because once you know how much you have here in terms of premium, you know what's your base cost, which it is your K minus your P. Your P total, okay? Your P total, it's all the total premium collect, and your K, your strike price. You need to keep a track how much you have collect so far, okay? And this spreadsheet here shows you guys how you can do it. Okay, you have your fees on every trade, how much you have collect here. This is pretty much the dollar value. This is the premium value. $2 multiplied by our multiplier of 100, you made $200. Here we made 35 cents, $35, $12, 18 cents, $18, 14 cents, $14, and so on. Okay, and here is the accumulation of the whole premium, right? Very, very simple. Of course, if you guys do find any kind of voo or mistake, whatever you want to call it, you let me know, you can fix there, okay? But this will give you guys an idea what I was talking about when I placed this video here in our channel, which was how to go from a losing cash secure put to $500,000. This is exactly what I did, guys, with Meta platform. Okay, Meta platform, my strike price was 185 because Meta was trading at something like 240. And of course, we had the bear market, things like that. And then I kept lowering my base cost, keep lowering base cost. And another big thing here, okay, there's plenty of trade management. I lowered the strike price from 45 to 44, like I showed you guys. Guys, this was just because the stock price was pretty much the same at the strike price. But if you was deep in the money, I could have added here another contract. Okay, there's plenty of things you can do when it comes to cash secure put options. If you know how to manage your trades, you are 95% ahead of everybody else. You can turn a losing trade into a winning trade. The only things you cannot do it, guys, is start to keep adding contracts every single time you roll your trades. You need to know when and how and why you adding another contract. Very, very crucial. And all the contracts that you add in here has to be equals, let's say, maximum 3% of your portfolio value. Because if you keep adding contracts and at the end, one single trade is 30% of your bank account or for your trading account, guys, if this trade here goes to zero, which anything can happen, Amazon can go to zero, Meta can go to zero. Anything is possible, okay? That's why we stick with ETFs at the beginning when you don't know what you're doing, okay? But watch this video here, because this video here is what we start this video today. And this video today is in relation to that comment that we received here from one of our subscribers asking us for a visual example. And for those of you that are going to download this spreadsheet here, all the update versions of this you'll be receiving on your email, so you can just update your old versions with your new versions, because right now I'm gonna add here another money in this column to see if the trade is in the money, out of the money, all those good stuff. By the time you download this Excel, this spreadsheet, we have way more better things than these, okay? And of course, I'll keep improving as well. And if you guys have any idea, just click on the link below and we keep improving this for the whole community, okay? So all of us can have something for us to quantify and qualify our cash secure put trades. All right, very, very crucial, guys. You need to be a math geek when it comes to trading, because if you don't know your numbers, I'm sorry, something is just not right. You must know your numbers. Very, very crucial that you need to know where your strike price are, where your premiums are in terms of trading. Very, very crucial, because if you don't know how much premium you have collect, how are you gonna close your trades? Sometimes you can close a trade with $2 in the money and it's still making money. Why? Because you collect here $3 during all these procedures. Very, very crucial, guys. And sometimes, let's say, for example, the trade is losing $2, you collect $3, and earnings come along. You got few choice. You can take advantage of the volatility and collect way better premium, or you can just close the trade so you can avoid that 50-50 earnings binary event, when the stock can go up hugely and can go down hugely. You can do a lot of stuff, okay? Trade management, it is the key when it comes to trading options, especially cash secure puts. We can lead you to many strategies, like I said, covered call itself with a covered strangle, or maybe the wheel strategy, but always start with the cash secure put option, which in my point of view, it is one of the best strategies out there to trade options, okay? Even maybe to buy stocks at a discount price. And that's why I showed you guys this thing here, which I'm going to make available for all of you very soon, which it is this trading view indicator, which you're gonna be able to see what 7% mean on the chart, and you can have your lines here as well. At 7%, 10%, you're gonna say to yourself, oh my God, look at this. There's a support here. 1 touch, 2 touch. How much is this in here? Roughly 10%. Why? Because the line here, it is at 10%. Actually, if I go back here, I'm going to show you guys just 1 second. Let me see if I can go back to my trading view. And let me see if I can put those lines there so you guys can have an idea. Lines, side lines. Here we go, guys. Look at this. Look how nice this indicator is, okay? Let me go back to trading view. As you guys can see now, I put the lines, okay? So, did I put the lines? Yes, I did, but I deleted something else, okay? Let's try that again. Go back to TastyWorks. Go back here. Hide the line, hide the table. That's great. And then this one here. Great. Now everything is great. Look at this. Look how amazing is this, okay? So basically, the 525, which is 7.5% below the market stock price, it is this line here. You look at yourself and think, oh, what is 12.5? 497. So I need to place my strike price at this level, okay? What if I think the stock market is going to drop 20%? 454. Guys, my strike price go all the way down here. And I look to the left and I think, okay, maybe a support here, maybe a support here. I'll be safe to place my strike price below this support, okay? So very soon, I will provide this to you guys as well, so you can download for free and you can add to your trading view, okay? It's going to be for all of you that do use our link below to open your trading view account. Very, guys, it is one of the best softwares you can ever find as a trader. Very, very, very helpful when it comes to trading view. But of course, I will make a free to all of you. Nevertheless, if you click our link or not, I'll make available to all of you for you guys to use, okay? And just a few mats here. As you guys can see, we have 6 rolling. As you guys can see, 1, 2, 3, 4, 5, 6. These formulas here, guys, this is all automatically, okay? Don't touch this either. We collect here $362 in premium, which it is 3.62 multiplied by 100. So that's 362. $2.81 here in commissions. And our net premium, after we have done all this trade management, we managed to make $360. Let's call that 360. That's the way, guys, you make money, knowing how to manage your trades. Although the trade went way deep in the money here, which I'm going to put another column here to see how much was below the current stock price, how much the stock dropped. Let's say 42 from 50 is roughly what? Maybe 10%, 20%, something like that. 20%. Let's call that 17%. We're still making $306. How? Knowing how to deal and how to manage your trades. Okay, guys, I think it's enough for this video. Don't forget, click below, download the spreadsheet, use it, and let me know how we can improve this spreadsheet on the comments below. If you want to support the channel, the best thing you can do is press the like button, subscribe to the channel, which are going to provide you guys with a lot of contents, and of course, all the things like this, for example, which is a spreadsheet, so it can help you guys with your trading, okay? And of course, leave your comments below in terms of what do you think about the video, okay? Guys, all the best, stay safe, and happy investing.